Hello, humans, bulls, and bears. Yes, I do think the debt storm will come home to roost in 2022. Now, I normally don't like to make predictions on timelines, but if I had to if I had to make a guess, it would be towards the end of 2022 in the second half of 2022. Before we get started, please make sure you like and subscribe. If you're not already subscribed, please make sure you subscribe. A lot of important news to cover today, and as we continue down this road of this economic path of destruction that the U.S. is headed towards. And for those that watched the last video and commented down below, congratulations. Just about all of you nailed it. The reason why we're seeing such a big increase in consumer spending is because more people are running up debt, right? We've discussed that here many times. More spending equals more debt in most cases. Just about in every case you've ever seen that statistic, it's because of more debt. And it shouldn't be too hard to figure out. And just look at it like this. Why do you think interest rates can never rise? Because that would actually cause consumer spending to crash. The more people have a harder time borrowing against their homes, the harder it is for people to buy homes, therefore creating rising home prices. And then rising home prices gives more people equity so they can take cash out, more money to spend. Unfortunately, for homeowners, taking cash out increases your debt. Yes, you're on the hook for that. It's not free money. The home is an ATM, but it's an ATM of debt that you have to pay back at some point. The sad truth of it is most people will not pay it back before they're taking their last breath. Most people will leave this world in some sort of debt. That's the way that it works in this Ponzi scheme of what we know as the U.S. economy. A little more than 60% of Americans own their home. Technically, they don't own it, though, because most of those people have mortgages. So you could say you're a co-owner with the bank or the mortgage company. All right, but let's talk about some recent news, what I see is going to happen in 2022. And in this last video, we asked the question, why is holiday spending increased, or why did it go up so much from the previous year? One is because we had the shutdown in the pandemic. But two, people are taking on more debt. Let's take a look at this. Recent Forbes article, debt is on the rise, increasing risks for many households. Absolutely. The more people borrow against their homes, the more people run up debt. Even if you're not taking out a home equity lines of credit and borrowing against your home, debt is still a very risky game. And we know that more people are likely to run up debt when they think the economy is on a recovering path. And when a lot of the news channels put it out there that the economy is recovering, what they'll do is they'll point to consumer spending. But what they won't tell you, a lot of times they'll leave out the fact that consumer spending is only increasing and holiday spending is only increasing because of the rising debt. More people swiping credit cards, borrowing against their homes, etc. From this article here, household debt keeps on going up. It grew by a non-inflation amount of $305 billion in the third quarter of 2021. Those first three quarters 2021, capped the 10th quarter in a row in which household debt has grown. All right, and here is the cherry on top. Mortgages make up the bulk of the new debt. As a share of the after-tax credit, mortgages, including home equity lines of credit, stood at 63.2% in September 2021. And as a percentage, mortgage debt grew faster than home equity. I have to repeat that. As a percentage increase, mortgage debt grew faster than home equity. So let's put this into perspective. The more people borrow against their homes, the more money they have to go out and spend. The more banks loan out money, the higher home prices go because you have to borrow more to buy the higher priced home. So banks have to get further, issue more debt and allow people to get further into debt to keep the home price Ponzi scheme going higher. And people continue to ask the question, when will home prices stop rising? When will home prices come down to where they can afford to buy a home? The answer is simple: when the debt stops being issued. When you start putting a cap on how much digital money banks can loan out. And in our last report, we coined the phrase digital notes. When you put a cap on how much digital notes can be issued out by the banks who actually don't have the money, but they can issue out unlimited amounts of digital notes. When you put a cap on that, that's when home prices will stop going up and may start coming down. Until then, it's just going to be bigger bubbles, higher home prices. Therefore, rents are also going to rise. And at some point in 2022, I expect a re-emergence of the eviction moratoriums because things are going to get so bad, especially later in the year 2022, as this debt storm. The chickens come home to roost on this debt in 2022. Why? Because wages are not keeping up with the rising costs, and the costs that are rising, the rising costs are just going to get worse. Not only are costs going to continue to rise, but the pace of the increase is going to get worse in 2022. It's going to get move faster into the stratosphere in 2022. Why? Because there's not many manufacturing jobs coming to the U.S. In fact, as I record this video today, more jobs are being sent overseas, more jobs being outsourced to countries where the labor is cheaper. It's pretty simple. A higher cost of living is going to make it harder for companies to survive here in the U.S. because they're always going to be pressured to pay higher wages to keep up with the rising cost of living. Guess what? Companies don't want to do that. They want to have a better bottom line. It's all about profits. And yes, they will send jobs overseas to where the labor is cheaper. It should be no secret to most of you here. So yes, of course, debt is rising. And take a look at that Forbes article if you're interested. And this is worldwide. We have digital notes being issued by central banks worldwide and by lending institutions worldwide. Look at Canada. Canadian residential mortgage debt. Look at this chart. It's exploding. This is almost, it's going to go vertical if it goes up any faster than what it is already. If you look to the far right here of this chart, it's near vertical. Right, so this is the name of the game wherever you go. And actually, the United States isn't even the worst offender as far as running up this amount of debt and bank stimulus. Let's take a look at this next chart. And this shows us the balance sheet as percentage of GDP. If we look down here at the yellow line, the Fed is not even the worst offender. We have the ECB, the European Central Bank, the Bank of Japan, way higher than the US. So everywhere you look, nationally and even down to the household spending, it's based on debt. To keep this operation going, it has to be more debt on top of more debt. Never-ending increases in the amounts of debt. And here's kind of a funny meme that was going around. Homeless, please help, God bless. $100 bills only. The homeless are only accepting $100 bills because of inflation. Obviously, that's a joke. But the homeless person getting a $1 bill handed out can't even buy anything from the Dollar Tree because now it's going to be the $1.25 tree. Think about that. So we have to ask ourselves, people, where does this end? What's going to stop this? They cannot just stop printing money. They can't just raise interest rates because everyone's going to know what the cause of the crash is if they were to do that. So there could be some other thing that happens to stop this. Will it be a black swan event? Will it be a massive grid down scenario or blackout scenario, power outage? This grid gets taken down, it's hacked or something like that. That could stop this whole thing in its tracks. Otherwise, it's rising prices, and look out, the debt storm comes to a head in 2022. Fasten your seatbelts, folks. Keep riding the bull. Prepare for the bear. Thanks for being here. Big love to all of you. New outro song coming in 3, 2, 1.